gossip of the market. Now, I know everyone knows that Obama got re-elected, but why this is important? We're talking about the fiscal cliff, the pending issue of the fiscal cliff. Now, Obama in 2010 asked to extend the Bush policy for 2 years, which expires the end of this year. What happens is that there are a lot of uncertainties. Obama has some issues with the Congress and the House of Senate, so probably the policy might not be implemented or not. So this raises a lot of uncertainty in the market. Another thing is Hurricane Sandy. Of course, Hurricane Sandy left a lot of, slowed down actually the production. People had lost their jobs or because of the slowdown in production. State of the jobs market, rising job claims and high employment. I'll be speaking of them later. Development in Europe, I know all of you know the issue in Europe, but what happened is that last night France has stripped from its AAA rating. Spain has actually declared 10.7% of bad debt in its financial sector. We don't know Greece, where does it come in the union? They're uncertain. So this uncertainty raises uncertainty and volatility in the market. Now basically just if you look at the graph, the United States GDP growth rate started with 4.1%, it dropped to 2%, and ended the third quarter with 2%. United States initial jobless claim, as I told you, one of its factors, the Hurricane Sandy. If you can see, it had dramatically increased to 439,000 at the end of quarter 3. Comes in hand, the unemployment rate which increased at 7.9%, and the United States inflation rate has ended with 2.2% at the end of quarter 3. Khadija, can you take over, please?
Thank you, Mariam. Actually, we're a group of graduated students that have worked on the graduation project all together. This project was evaluated by a professor who's an investor as well. And we were all aiming to have an opportunity to inject our knowledge and education in a real market. Therefore, we were offered an opportunity by a professor who's Jasmine Ajmi, and we were given an amount of $5,300,000 to invest. And we are free, we have the choice to invest in any market we would like to. Therefore, we have divided the amount into 2 markets. 1,300,000 in the Bahrain market, and the rest of the amount in the US market. Therefore, we have set a policy to be followed in order to start the investment program and the trading. First, we will identify the profile of the client and the goals that are needed to be required by him, and those goals need to be met and matched with our own goals as well. The second thing is that we need to make an efficient allocation for the assets. And of course, after all of that, we need to implement the things that we have planned for. After all, we need to monitor and evaluate our work in order to see what are the weaknesses and the strengths, and to modify whatever is needed, whatever needs to be modified. That's the name of our client. And typically, we know that investors seek to have a growth of capital, and we of course care about the wealth of our shareholder. And the thing is that we have a short horizon, which does not really allow us to play with the money very well, and we might need to be a bit more volatile. But that's a good thing, I guess, in order to know how to play with the things. And of course, we were chosen because we have enough knowledge, but nothing is enough and nothing is ultimate. We need to increase our knowledge and the education about the market. And of course, we need to focus on the equity investments. The risk objective, of course, in order to invest well and get along with the market, we need to have management regarding the risk and the return. Therefore, we have certain objectives for the risk. Of course, the horizon is short, therefore the significant assets should be considered. And as we said, we have to have enough knowledge about the market and what is going to be done in the market, what things are affecting the market and the investment, the portfolios as well, and the economy. And average ability to take risk. We are willing to take risk, but we need to diversify in order to average good volatility and high willingness to take risk. We are focusing on the equity, and the rest is focused basically on the equity. And as I said, diversification is something important in order to be balanced. As per the return objective, we are going for an axis return method, and the targeted Sharpe ratio is 1 or more than 1. It depends on the portfolio and the performance by the time. And the management targets is the S&P is the index plus the risk-free rate. I'll leave the constraints for my colleague Ibrahim.